Okay, cool. Yeah, I'm going to start with EU today just because it was a little bit nicer. I know it's controversial to say that, but GU, like from the overall higher time frame picture and even intraday picture, is nice. It's just the lower time frame. If you were to kind of look for the entries, perhaps could have been a few no tags, which is what happened with me. EU had all the same kind of criteria, but the entries were tagged. Like there was some nice entries today and nice reasonings for getting in the entries as well, which is the main thing. So if I just quickly go up to the daily, I've kind of just removed everything from up here now. We were heavily bearish. We took out the lows over here. I don't have the FXCM data with the very left price, but pretty much we're just bearish, right? In terms of the daily, that's like the main thing that I'm considering. And then kind of justifying where are we actually going to pull back to and then get that continuation. I did initially have a few of these CPBs kind of marked, which all gave quite nice reactions in their own right, and kind of with a few intraday trades from these areas. So basically these flip zones, I think there was a few sells from here at the time with this inside bar, and now finally with this one. And so with this one up here, we're actually reacting to, we've had the huge push down. We were respecting the overall extremes. We've come up again, and then we've actually respected it again. So now we've got this quite nice chain beginning to form, which is giving me a bit more confidence in like favoring the sells. Obviously the overall narrative was for the sells, but when they're going to actually start following through, we could have argued it had been here, but then it just didn't. It rejected the bottom. And then even with here, you could have done the same thing, but then it rejected the bottom. What we actually did here, if I just zoom in, we swept this kind of ERL below this low, but we maintained the structural low. We didn't break it. So this ERL sweep basically acting like a CPB, doing the same kind of job in the sense it just pulls us back into supply, which if we look at kind of the interactions prior to it, we had this supply chain being respected. Like our last point of demand before this mitigation, you can argue it's these buy to sell wicks, or if you have the whole grey candle, that's fine. But we react to it here, extreme of reaction leg, which aligns with this, and then the failure. So from this sweep, it's just pulled us back into this flip zone with supply already confirmed to us being in control in terms of the 4 hour. So taking sells or favoring sells from here could have made a lot of sense, and then targeting, you know, this low and this low. And it's pretty much the same story with what's happened yesterday and today. Kind of we sweep, same way we did here, we sweep the ERL, we begin internal bullish structure or order flow with demand and control. This is more visible on the 15 minute. And the same way here, we take out the overall low, we fail to break it, we just sweep it essentially. And then again on the 15 minute, you can see this order flow here a bit more clearly. We essentially just pull back into 4 hour supply, which, as I mentioned before, is heavily in control from this initial interaction here. Now, this kind of price action could have happened from this. We could have done the same thing here, or from this. It just so happens that we've done it from this one. And so, if I go down to the 15, so it's very similar. The way these are pulled back are very, very similar. If I just draw on this sweep, so we have the flip zone of the 4 hour here. We've swept the ERL here. We've broken the last point of supply before the sweep. We've then come in to demand and respected it. So now from this point on, 15 minute demand is just heavily in control as we begin our pullback. And so each time we kind of pull down from potential areas, looking at areas like this, when we have the 4 hour zone here, it's likely just going to be used as a catalyst for a pullback. It's not going to be something to sustain bearish price. This is our 4 hour flip zone where price can potentially take control and take the lows. And so until we actually break demand, I want to just assume demand is still in control, which we just continue to respect it all the way up. So even if you're selling from here, which could make sense because we're within the 4 hour, we just run straight into demand once again with this demand chain and continue higher. So demand never actually failed. We just continue to break to the upside with demands being in control. And then kind of during NFP, it was quite a bit of a mess in terms of the price action, but the intentions were fulfilled. Basically from this 4 hour level, we began to break demands. We took out all of this internal range liquidity and then took the low out. Excuse me. So the same kind of literally identical, this and then this. This time though, this is an NFP and this is much nicer price action in terms of getting involved, which I'll cover these trades. But this sweep, the overall low, same principle, last point of supply before the sweep, so the same as this was. We have the reaction to it, extreme of reaction leg, the failure, and then we begin to see demand holding after the failure of this point. So with this being an ERR sweep, if we're going to continue lower with this kind of supply chain, this in theory should just sustain bearish price. And if we begin to break it, which with this breach here, you could argue that perhaps it's just mitigating this at the time, which could make sense, but we run into demand and then continue higher. And so we've taken out this whole chain now. We've kind of, the very last point of this chain gets swept. You know, sells could make sense, but again, it's still counter now to the 15-minute order flow, because we've had evidence here of demand holding after the supply failure, after this ERL sweep with our 4-hour zone up here. So kind of using the 15 minutes to guide us towards these zones and then away from these zones is always what I preach about 15-minute. Use it as the guide between the higher time frame levels. And so following the order flow, like trying to aggressively short after things like this, they can make sense, but don't be surprised if we just run into demand. We might get a small intraday play or 1-minute play, but for the higher time frame intentions to play out, it makes sense that demand continues to be respected, because demand's in control essentially. And all of this is just internal range liquidity now, and we come into this overall zone. But each time we take out the high, we just run into demand again. We run into demand and we just continue to respect demand all the way up, very similar to what we did here with demand in control. And so it kind of brings us on to today. So we've hit this zone now. We can still say that demand is just continuing to be respected all the way up until this point. We do break this kind of inside bar here, and we do begin to break these areas of demand here now. We can still say we've not had a level of supply hold after the failure, so we can still class it as potentially demand still in control. It could just be a breach of demand, maybe to sweep and then continue higher. So that can still be on the back of our minds, that it's counter to the order flow. But of course I want to get involved in the sells, even though technically at the time it's counter to the 15-minute order flow. And the reason being is because this ERL sweep has fulfilled its intention. We've reached our target now. But I don't want to assume that this is going to break. We're going to break this 4-hour chain based off an assumption. I want to go off the evidence that, okay, 4-hour supply is in control and now we've arrived here. So 15-minute here still makes sense that it's demand in control, but we've broken demands now. Where are our supply levels? So we have this inside bar break, potential extreme, and we've basically flipped off of whether you use this wick here, we react here, we pull up, we break, or we use this wick from this demand. Either way, we've basically flipped off of this demand, extreme of reaction leg, and then the failure. So we have an area of 15-minute supply now. Now, again, it's counter to the M15 order flow technically, in terms of what you could argue is who's in control in terms of demand, supply not holding after a demand failure. However, we have taken out all the internal range liquidity, so there's no reason for demand to still be in control, technically. So with this 15-minute zone, of course, you want to sell off of it. Now, whether you take it aggressively based off the intentions being fulfilled and you just want to take it, it makes sense. It's a liquidity POI. It's from a flip zone. The overall bearish narrative is to sell. We've taken out all the internal range liquidity and we have all of this to now take out. We've began taking the initial stages out and we're at a supply zone. So once this gets respected and continues and we're at this stage, you can argue that the rest of this is gone. Basically, there's nothing really sustaining bullish pressure now. This is just internal range liquidity. This is a weak low and it'll go once it's kind of, we're at this stage, we've reacted to supply and we're at this stage. But in terms of the entry, so it was perfectly valid to get involved just off the actual zone itself. If you want a little bit more confirmation, because it's still demand's still been holding prior to this, we have the mitigation here, last point of demand before the sweep. You can argue it's these wicks or this inside bar that I would turned on, but it's orange candle. So we flip from this. So whether you're in from the flip, in from the risk entry, or you wait for even further confluence of a level of respect of the 1 minute purely because we've yet to see supply hold on the 15-minute, all three of those entries would have been perfectly fine. We have structural liquidity below the level of respect as well as it being a liquidity POI. So whether you enter, say here, or you have the level of respect, break of last point of demand before the sweep. So it's always the same principle that I go over, but it becomes smaller and smaller based on the time frames, but it's always the same principle. So kind of once you read it on the 15, like I mentioned, over here we have the sweep, last point of supply, the sweep, last point of supply. Now it's just a 1 minute. It becomes smaller, but it's the same thing. So we have the sweep, last point of demand before the sweep, these wicks. So we break these wicks. What causes the break? There's only one candle there, so it has to be that. It can't be anything else. So this entry here, once this breaks, so okay, all three of those entries perfectly valid, or probably more than valid, to be honest. They're really good. And then as we follow price on, you'll see that I'm not just sticking to the 1 minute. These are all 15-minute ideas. It's all 15-minute stuff. So if you're marrying the 1 minute, like trying to dive in sell at pair, you might get the winner that runs, but you might have done the same here. You might have just bounced back, but waiting for the 15 minutes intentions or 15-minute zones, I think it just simplifies the trading. You can get involved in pro order flow or counter order flow, and knowing even before you arrive at the zone what your plan of attack is. Whereas 1 minute, you kind of, I feel like you can be looking a bit too intently at things to the left, which are realistically just CPBs now with this internal range liquidity, and thinking, okay, if I'm going to get in a 1 minute continuation here, I need to be careful of these kind of things. But realistically, these are just going to be used to pull us back into the 15-minute supplies. So with this supply here being the first trade, you could justify this wick as a potential other entry here. It wasn't the overall cleanest, but it was valid. I'll go over it in a second. And then kind of this candle here, or these buy to sell wicks here, again, another 15-minute zone. Again, using these CPBs to pull us back into these areas. So if I go to the 1 minute, so you can see as we progress down, we flip off of this extreme demand, extreme of reaction leg failure with potential liquidity below in terms of a 1 minute. 1 minute liquidity, if you're looking at the 1 minute price action, again, because it's 15-minute trade ideas, which I'm kind of leaning towards, this is certainly valid in terms of 1 minute, but because of my bias on 15-minute, I want to use 15-minute more so and kind of stay away from 1 minute stuff. You can use the 1 minute to justify 15-minute POIs. Again, this is a 15-minute POI, which I mentioned a minute ago, but then using the 1 minute after it, basing it as a 15-minute trade idea rather than just a 1 minute trade idea. So we mitigate this, we kind of flip off of this demand, kind of begin to align into this kind of chain. Again, we mitigate it here. You could argue this is 1 minute liquidity below this, but again, 15-minute zone, I want to see the mitigation, or I want to see liquidity built to the right because it's a 15-minute zone. And so there's no 15-minute liquidity, which is the structural concepts that I factor in heavily. So we've mitigated this zone now, and we do end up pushing to the downside from this mitigation, breaking these areas, last points of demand, what causes the failures. So whether you have either of these, really, we've got this kind of extreme area. We do have available structural liquidity below, with this then being the confirmation entry of this 15-minute zone. But again, if you'd have had this, I think all of them are perfectly fine. All of them are good entries. I just think these two would be my preference. And then, yeah, we just follow through with the intentions. We take out all of this liquidity and we eventually take out the low. And so we can kind of just rinse and repeat the same thing. If we look to the 4 hour, we are beginning to just kind of range a bit. We're not heavily impulsing. Once you take out the low, we're just pulling back heavily. And we've done the same thing here. We've broken this low, but we're still only wicking it. So realistically, we are failing to kind of follow through with the heavy intentions. So whether we're going to begin to come into like a bit more of a range in price before maybe getting a deeper correction into the higher time frame zones, maybe into something up here or here on the daily or weekly, or whether we will in fact just pull back into something, again, same way we did here, and then eventually get that follow through. You know, we can certainly just play it the same way we played the previous two pullbacks. But the more like we are just failing to breach the lows, it does give an indication that we are struggling, or we are beginning to go into a bit of a range, but supply is still heavily in control in all time frames. Structure's bearish. We're just heavily bearish. So any longs, even after this sweep, let's say we have this sweep, we have last point of supply, you could have this wick, or you could have this wick. Either way, we broke both of them, so it doesn't really matter too much. you want to see an area of demand hold. If this begins to hold and we begin to get demand taking back control, then it'll just be kind of the same principle as what we've done previously. So yeah, that's pretty much it for EU.